And now joining me is Antonio Graceffo, China economic analyst. So it seems like China's economy is facing a lot of headwinds right now. That's including things like capital outflows, property crisis, and just recently we just had data that China's factory activity is actually in contraction. So tell me in your own words, what is the state of China's economy right now?
Yeah, China's economy is facing a lot of challenges right now. As you said, I mean, the real estate slash, financial bubble, debt bubble, that has not been resolved. Factory activity is down. We have migrant workers that are increasingly unemployed. And remember that the migrant workers, there's almost 300 million of them. They are not counted in the unemployment statistics. So when you read that only 5% of workers in China are unemployed, that number is grossly lower than the real number because these migrants can't find work. So they normally work in the factories. Xi Jinping has wanted to shift the country away from exports and away from real estate and have consumer spending sort of bolster the economy, but consumers are afraid to spend.
Yeah, it seems like it's not a very pretty picture right now. But how dire is the situation? I mean, if you were a Chinese lawmaker, like, what would you be feeling right now?
Well, I don't know if, dire, dire is an extreme word. If I was a Chinese lawmaker, I'd be very concerned, right? Because the underlying understanding, the agreement that China government has with the people is that I will make you rich. And in fact, Xi Jinping even told them it's patriotic to become rich, right? That was the mantra maybe, 5, 6 years ago. And you help the country by becoming rich. Now, suddenly people can't become rich. People can't afford to buy apartments. Oh, that's another thing with the real estate. So you got young people who can't afford to buy apartments. Meanwhile, there are tens of millions of empty apartments in China. And the problem is that the prices could not come down because of artificial price controls. They couldn't come down to meet the market. Some cities are now starting to remove the price controls. There was at least one example of a city where when they removed price controls, the prices dropped by 50%. You can't have just countless empty apartments and maintain the prices. Obviously, the prices have to come down. They came down by 50%. People complained because the people who already own apartments, their wealth is tied up in the apartments. When the apartments all lose value, they're losing their wealth, so they complain. So then the city government raised the prices again. So, as a lawmaker in China, they're faced with a very difficult task right now to try and find a way to provide the people the prosperity that they promised.
So all these problems added together, I mean, what would this amount to? Something that we can see tangibly, perhaps slower economic growth? I mean, tell us about it.
Yeah, definitely slower economic growth, growing unemployment, decreased income, which is a big one because, as an Austrian economist, I don't just look at people that are jobless. I look at are people that are working, are they earning the same that they always earned, and they're not because they're working fewer hours, less overtime, that sort of thing. And then that all translates to less consumer spending. So we're already seeing a decrease in luxury brands, decrease in foreign brands in China. The discount stores and the discount online shopping is growing, while Alibaba and some of the other traditional retailers, they're losing. Believe it or not, even Meituan, which is a service that basically delivers your food and other products to your home, Meituan is seeing a decrease in sales because people don't want to pay the additional fee for delivery, which in China is really just a very small amount of money. And meanwhile, people don't want to spend it because they're so price sensitive right now.
So if China's economic growth slows down, are we going to see at least a portion of the Chinese population, being unable to afford groceries, potentially, starving? Are we going to see something like that?
I don't know that we're going to see starvation. We're certainly going to see a decline in the quality of life. Because remember, for example, the migrants are a really good example. I mean, some of these Chinese farmers earn like $200 a year in cash income. So their kids go to the city and they work in the factories, and that is the main cash that's coming back to these families. And now those kids can't find, and I'm saying kids, I mean, these could be people in their 30s and 40s as well. And, what are they going to do? They can't find a job in the city. They can go back to the farm, but the farm is only generating $200 a year. So these people are going to be eating nothing but rice. They're not going to have any extra cash to do anything else with. They're going to have to decide what to do with their children that are in school and so forth. So we're going to see a decline in the quality of life, certainly of the lower third of the Chinese population. And of course, everybody will see a decline, but they'll see a dramatic decline.
So I know credit is the lifeblood of the U.S. economy. Is that the same for China? Is credit for China just as important as it is for the U.S.? I mean, what is the lifeblood of the Chinese economy?
Well, the lifeblood of the Chinese economy has always been the real estate sector and the export sector. And now both of those are in major decline. And the big thing with the real estate is that the only way they're going to clear out the empty apartments is if they pull out the price stops and they just allow the prices to go to the market. But if that happens, it's going to cause a lot of the loans to crash out because the property is basically the collateral securing the loans. So that's one problem. Then on the export side, there's only so much China can do. They already have suppressed wages. They have, through Belt and Road Initiative and other initiatives, they have cheaper raw materials. They bypass sanctions to buy cheaper oil and energy from Russia and Iran. They've done everything they can to cut the cost of their exports, and yet demand for Chinese exports are down. There's nothing China can do to stimulate demand for China exports. So the only way forward for the Chinese economy is Xi Jinping's plan to stimulate consumer spending, which you can't do if the people are unemployed.
Well, it seems like Chinese lawmakers are between a rock and a hard place. I mean, in your opinion, what kind of trajectory is China's economy headed toward?
Well, the major rating agencies are already downgrading the GDP growth expectations for this year and for next year. I really believe that it's going to normalize around 3.5% and just stay there forever because and when I say stay there forever, I mean stay in this normalized range. Just like the United States, there was a time when the United States grew at a very fast pace. But then of course the economy matures and that's it, and then you start to have normalized growth. China's normalized growth will be higher than U.S. growth in terms of percentage, but the Chinese economy is smaller. So when China's growth starts to approach, say, 3%, it becomes about even with the United States in terms of the dollar value of the growth.
So it seems like Japan is trying very hard to keep its growth above around 1%. I mean, is that where China is headed eventually? I mean, is there going to be a threat where the Chinese economy, just collapses for a lack of a better word?
Well, I don't think it'll collapse, and it won't hit the Japan level of growth for a number of years. So the difference between China and Japan is that Japan hit their aging crisis in the 90s, but Japan was already rich. So although they didn't have a lot of growth and they remained stagnant for a decade and really have had lackluster growth, in the 21st century, it's still a much richer country. So in China's case, they're hitting their aging crisis now. It will exacerbate over the next 10, 20 years, and this will drag the growth down. But China is still a developing economy, whereas Japan was already mature. So we'll still see higher growth percentage in China than in Japan for decades to come.
All right, just one final question. Can China turn this around?
China could potentially turn it around if China were to allow the market forces to take control of the economy. But Xi Jinping is determined to have the Communist Party and Xi Jinping control the economy. And he seems to be prioritizing ideology and control over economic growth. So under Xi, I don't see this changing. I mean, Xi would have to have a radical change of how he's doing things in order to cause, to bring about a recovery.
All right. Thank you so much for your analysis today, Antonio Graceffo.
Thank you.